traders at Axis Bank say they expect activities in the Treasury bills market to slow today following the LDR penalty debit by the Central Bank of Nigeria. Meanwhile, investors have picked interest in the newly issued one-year T-bills. Eki Teddy-Onaghise, Treasury Sales member at Axis Bank, joins me now for more market updates. Eki, thank you for joining us today.
Thank you for having me, Esther.
Well, bring us up to speed on trading action so far. Let's talk about, we're starting with the liquidity levels of the market.
All right, so yesterday the market closed at about 165 billion, which was about 117 decline from the previous day levels, which was due to the LDR debit by the central bank, as you rightly stated. This brought the overnight rates and the open repo rates to about 4% and 4.8% respectively. We expect the central bank to carry out another set of LDR debits, CRR debits today, which will also tighten liquidity in the market.
Well, talk to us about the bond market. Your note says we'll be cherry picking. Talk to us about the yield curve and where you're expecting to see the most action.
For the bonds market, we've witnessed a slow activity in the market space due to the unclear policy in the market as well as the liquidity. We've seen the interest in just the mid end of the curve. While at that, we expect a bond auction to be scheduled to happen on Monday, where there will be about 360 billion on offer across the 2024s, the 2033s, and 2053s and maturities. And we expect to see the same trend as the previous auction, and we don't really expect much participation due to the unclear policy demands. Yeah.
Right, let's quickly, we'll come back to the bonds market. I wanted to just get your thoughts on the movement of the Naira. And of course, the promise by the central bank to clear the backlog in 2 weeks, I guess this week and the next week. And how is that impacting the movement? I'm seeing the Naira strengthening to 73662. Are you expecting further strengthening today?
So the NFX market, that has been the front burner since the government has announced about the intervention of 10 billion into the markets to clear out the backlogs in the next 2 weeks. We haven't gotten any clear-cut plans for that, but we expect to see something going forward, and the dynamics on how that's going to play out. We expect the rates in the market to also decline further if that actually happens, but we'll just wait to see what the central bank is going to do to carry out the plan.
All right. What can you tell us about happenings right now, the corporate bond market? Who's raising what, and also in terms of the premium gauging the FGN benchmark, CPs, and what levels companies are raising right now?
Right now, for the market as a whole, investors are actually skewed towards short-term bonds, short-term securities, because the Treasury bill yields are actually almost at par with the long-term dated bonds. So the interest in the CPs or the bonds are not really in the high side, but we have seen much interest on the Treasury bill, long-dated Treasury bill yields, which is almost about 40% close to the bonds where it's trading at the moment.
All right, Eki, we'll leave it there. Thank you so much for talking to us today. We appreciate your time on the show. That was Eki Teddy-Onaghise, Treasury Sales member at Axis Bank.